I'm Mike Roger with Investing News Network. We're here at the Vancouver Resource Investment Conference, and with me now is Dean Taylor, who's Chairman, Director, and CEO of Diamcor. Diamcor is on the TSX venture under DMI. Thank you very much for joining me, Dean.
Happy to do it.
So, I'm sure the big news, what you get asked all the time is Tiffany's. You're working with Tiffany's.
Yes.
Can you tell us about that?
Group to deal with. Yes. Yeah, we have about 24 months ago, after we acquired the project from De Beers, it was directly related to Venetia, and obviously Venetia is, it's De Beers' flagship, and it's synonymous with a very, very, high percentage of good quality and high quality diamonds, gem and near gem. And so we formed a strategic alliance with Tiffany's, whereby they secured a first right of refusal to take whatever product they wanted from our mine for the life of mine. They do pay full price in terms of market value. There's no discount or hedge. And in exchange for that, they provided us with very attractive financing to advance it towards production immediately. So it's a very much a win-win situation. They have their Laurelton facilities is their highest quality diamonds are polished directly in Johannesburg. And so what we're able to do is take the diamonds, have the best quality ones come out of there, ship them directly to Tiffany's and have them go to the Johannesburg facility, be polished and beneficiated within the country, which is great, the government loves, and then exported to US to put in jewelry, and then of course Tiffany's distributes to their stores and that. But it's really a win-win for everybody involved.
Excellent. So their right of first refusal, is that on a per lot basis or per stone?
No, they can pretty much take whatever they like, and so we expect, Laurelton quality stuff. When we talk about the real, high-end stuff, of course, Tiffany's being, synonymous with very high quality. You can see 2-carat diamond rings that are exceptional quality at Tiffany's for $500,000. So these are exceptional stones, and basically they can pick what they like from the production. And of course, it's very with the shortages of diamonds and difficulty getting a hold of, really good gem and gem stuff. It's a big advantage for them to be able to selectively pick what they need. They pay us fair market value for them, and then whatever stones they don't take, we put out to tender and sell to a multitude of buyers from all over the world.
Right. So for example, recent sale of just over 3,500 carats, so that wouldn't have gone to Tiffany's then?
No, the initial part, over the last 24 months, it's been about building out the plant, infrastructure, power lines, water, all the different stuff that's associated with the mine, the plant, and everything else. And we started commissioning the plant, and what we do during that phase is we test different size fractions, material, and everything else. And of course, we do recover stones during that portion. So the testing largely that we did was on the weakest area, which is the lowest grade, and only 1 to 10 millimeter material. So it's not the bigger material, but we did recover 3,500 carats. The estimate in the current 43-101 for that area for all size fractions was about $70 a carat. So when we sold those 3,500 carats, the number came in, the real number was $142 a carat. So quite a bit, over double what our estimate was, and we still haven't processed really the 10 millimeter to 28 millimeter, the above stuff. So we expect that number to go up, and in the end, probably around $175 to maybe $200 a carat run of mine is what our target is. So it is a, we expect 60%-ish, 60-65% gem or near gem quality. So it's very, very good quality, and we exclude, anything over 10.8 carats and up are specials. Those are very high dollar value stones, and we don't include those really in our run of mine. So those are numbers and additional revenues we have. But overall, out of the 3,500 carats, we have a lot of large stones too. Out of the 3,500 carats that we sold off, there was 300, I think around 300 and just a little over 350 individual stones that were 1 carat in size or larger, all the way up to 9.83. So a lot of really nice stones.
Excellent. Yeah. So the dollars per carat is really, it's a difficult number to quantify. So somebody looking at investing in a diamond company, that's always a big unknown. And so you're sort of on the higher scale, aren't you? 170 to 200.
If you divide out and say that you've got, it's shrinking all the time, the production, but let's say roughly 125 million carats, produced worldwide annually. If you average it out with the total revenues of those as they're sold as rough, you're probably around $120 a carat. So, that's kind of an average of what all the diamonds, if you put them in a pile and divide them, that's what they'd be worth. You'll see some mines that have $200-300 carats run of mine, those are very high dollar per carat mines. So, again, Venetia is, the deposit we have is directly related. We're directly adjacent to it. It's the top of the pipe has been forced off, and so it's really the same material diamonds and that, and it's, it's synonymous with very, very high quality diamonds. So we're real excited.
And so you think you can get that kind of quality or that level of dollar per carat for the run of mine?
Yeah,
for the life of the mine.
I mean, we're already at 142 on the weakest area with just 1 to 10.
Right.
So we'd expect that number to come up even for that area. And then as we go down below that into the higher grade stuff, the estimate in the 43101 it was 130. And so we expect that number will sort of perform in about the same ratio and be in that 250, 260 range. So when we average it all out, 175 to 200 is basically what we're looking at, on a run of mine basis. Our model worked well on $100 a carat. We kind of planned that $130 a carat was going to be a really nice number. So, getting up into the 175, 200 operating costs, are very low at our project. So it makes a dramatic difference for us. It's very, very good.
And then, of course, there's the specials on top of that. Which
the specials can be, they can be anywhere from a couple $100,000 to 15, 20 million a craft. When we get those are very, very good stones.
But very hard to forecast.
Yeah, you don't. We don't even build them in. We know that Venetia is a very large operation. We do know that historically their published number, the largest stone they've got is around 315 carats. We do anticipate that they recover large stones in the 100, 200 carat range on a regular basis, but a lot more volume is going through there. So we anticipate that, look, there's a good potential that we're going to see some large stones, but even something in the 20, 30, 40 carat range that's of good quality can be $1 million or $2 at least. So it's additional revenues that are just bonuses.
Excellent.
So it's very, very exciting for us.
Nice. And of course, you're in South Africa. So another question is, mining in South Africa. Typically, the news lately has not been good.
Yeah,
so
a lot of labor issues, things like that there that we've seen. We've operated there for 10 years, and we find it's a very, very good place to operate in terms of infrastructure and people and everything else. A lot of the things that are going on in terms of mines and that, it's hard to quantify. I mean, we're not experts on the bigger mines and that, but when you look at the overall wage cost there compared to here, it's probably 20 cents on the dollar. So, some of the mines are bigger. They've had the advantage of having, a lower cost labor in the past. And unfortunately, I think a lot of times it comes down to economics, where if the mine can't support, the higher cost of labor, no matter how cheap that labor is compared to the rest of the world, it presents challenges. But we don't anticipate much. I mean, our operation is pretty, we've operated for quite a long time. We're a smaller operator, so, 80 to 100 employees maximum, and, there's enough room there where we pay our guys very well, and they're very appreciative. And, so we find it to be a situation where, the big guys will always have their different challenges in that, and we basically, manage to not have to worry about that too much. So for us, it's a very, very good place. It's great resources, great climate, great infrastructure, lots of technology, people, and stuff. So it's very, very good for a company like ours.
Excellent. Well, that sounds really exciting. Yeah, good. Well, thank you very much. I've been talking with Dean Taylor, who's the Chairman, Director, and CEO of Diamcor. Diamcor trades on the Venture Exchange under the symbol DMI. Thank you very much.
Thanks, Mike. Pleasure.